Welcome back to our deep dive into becoming your own bank.
Becoming your own bank.
Yeah, last time we talked all about lending and borrowing and DeFi.
Yeah.
But this time we're going to talk about something even more interesting.
Absolutely.
And that is how to unlock the value in your crypto
Yes.
without selling it.
That's right.
So you've got your crypto, it's appreciated in value, and you're thinking about selling it.
Right.
But then you realize, well, wait a minute. If I sell, I've got to pay taxes.
You got...
And I'm going to miss out on maybe future growth.
Exactly.
What if there was a way that you could tap into that value
Right.
and still hold on to your assets?
That's what we're talking about today.
Okay, that sounds too good to be true.
It does sound too good to be true, but it is possible.
How
Using DeFi,
Oh, okay.
we can use DeFi lending platforms
I'm listening.
to unlock the value in your crypto.
Okay.
You can think of it kind of like a high-tech pawn shop for your digital assets.
Pawn shop for crypto.
Yeah.
Okay.
So let's just say, for example, you have 10,000 XRP,
Okay.
and each XRP is worth 2.50.
All right.
So you've got a total of $25,000.
Okay, got it.
But you need some cash. Let's say you need like $10,000.
For a spaceship.
For a spaceship.
A down payment.
A down payment on a spaceship.
Okay.
So instead of selling your XRP,
Yeah.
you can deposit it on a platform like aave
Okay.
as collateral and borrow $10,000 in stablecoins.
Stable coins.
Yeah, think of it like a digital version of the US dollar
Okay.
that you can use to buy things in the real world.
So I'm getting a loan, basically,
You got it.
using my XRP as security.
Exactly.
But wait a minute.
Yeah.
Don't I need like a good credit score for that?
Nope. That's the beauty of DeFi.
Okay.
You don't need a credit check.
Oh, wow.
No income verification.
That's amazing.
None of that.
So much simpler than getting a mortgage.
Way simpler.
Or like a home equity loan.
Yeah, all that paperwork and hassle.
Yeah.
Forget about it.
So all I need is the crypto.
That's all you need.
Okay, so what's stopping me from like borrowing, $24,000 against my $25,000
That's a good question.
of XRP?
That's where over-collateralization comes in.
Over collateralization.
Yeah, so DeFi platforms require you to put up more value
Okay.
than you borrow.
Makes sense.
It's kind of like if you go to a pawn shop, right?
Yeah.
You're not going to get a loan for the full value of your grandmother's antique watch.
Right. They're going to give you way less.
Exactly.
Yeah.
They need a buffer in case they have to sell it
Got it.
to recoup their money.
All right, that makes sense. So with over collateralization, let's say I've got to deposit maybe like $20,000 worth of XRP
Yeah,
to borrow $10,000
right.
in stable coins.
Exactly.
But what happens if the price of XRP drops?
Oh.
Is my loan like at risk?
Yeah, that's the thing about crypto.
That's
It can be volatile.
Yeah,
The price can go up and down.
for sure.
And if the price of XRP drops significantly, you could get what's called a margin call.
Margin call.
Yeah, which basically means you need to deposit more XRP to maintain that required collateralization ratio.
Okay, so there's a chance I could lose some of my XRP if the price tanks.
There is a risk, yeah.
It's a little scary.
It's something to be aware of.
Okay,
That's why it's important to choose the right collateralization ratio.
right.
And, we'll talk more about the risks involved later on.
Okay, so back to my original question. How does this compare to like traditional ways of getting cash?
Right.
I mean, I could just sell some of my XRP, right? Or take out a home equity loan,
We could do that too.
refinance my mortgage. Like what's the difference here?
So each of those options comes with its own drawbacks.
Okay.
Selling your XRP, for example.
Yeah.
That's a taxable event.
Right. I'd have to pay capital gain.
Exactly. And you're locking in your profits.
Yeah.
You're missing out on any future price appreciation.
Right.
Yeah.
Okay. So that might not be the best option then.
Right.
What about like a home equity loan or refinance?
Yeah, you could do that.
I mean, people have been doing that forever.
They have. But think about all the hassle involved.
Uh-huh.
Mountains of paperwork credit checks.
Oh,
Income verification proof of assets.
it's like pulling teeth.
It's a whole ordeal.
Yeah.
And don't forget about those pesky banking fees.
And closing costs.
And closing costs.
Yeah. That's a pain.
It is a pain.
So it sounds like this is a much more streamlined
It is.
and efficient way to get access to this money.
Absolutely.
Okay, well, I'm definitely hooked.
Good.
Let's dive deeper into this.
All right, let's do it.
What else do I need to know?
Well, let's start by taking a closer look at how these platforms actually work,
Oh,
using Aave as our prime example.
sounds good.
All right. So before we jump into Aave,
Yeah.
I did want to touch on one more thing.
Okay.
You mentioned home equity loans and refinancing.
Mm-hmm.
What about borrowing against stocks?
Oh, yeah, that's a good point.
Have you ever heard of that?
Yeah, I've heard of people, using their stock portfolio
Right.
as collateral for a loan.
Exactly.
So is that like a better option than using crypto?
Well, it depends on your individual circumstances.
Right.
But you're still going to face, that paperwork
Uh-huh.
and credit checks and potentially higher interest rates.
Then DeFi.
Yeah, compared to DeFi lending.
And what happens if the stock market crashes?
Right.
Like my portfolio value plummets.
Same thing that happens with crypto.
Right.
You could get hit with a margin call.
So you're saying there's really no advantage there?
Not necessarily. It really depends on your situation
Okay.
and your risk tolerance.
So it sounds like DeFi lending
Yeah.
is kind of winning so far.
In terms of speed and simplicity and potentially even cost.
Gotcha. Okay. Well, let's get back to these platforms then.
Okay.
How do they actually work?
All right. So aave.
Yeah, you mentioned aave.
Aave is one of the leading DeFi lending platforms out there.
Right.
Really user-friendly interface, wide range of supported cryptocurrencies.
Okay, so what makes it so special?
Well, one of the really interesting things about aave is how it handles interest.
Okay, so with a traditional loan,
Right.
I've got like a fixed interest rate.
Mm.
I make payments every month.
Yeah.
How does that work in DeFi?
So in DeFi, things are a bit more dynamic.
Yeah.
Some platforms do offer fixed interest rates.
Okay.
But many of them, including aave, use algorithms.
Algorithms.
Yeah, to adjust interest rates
Favorite sauce.
based on supply and demand.
Oh, so the interest rate I pay could actually change,
It could go up
up or down.
or down depending on what's happening in the market.
So if everybody's trying to borrow Bitcoin,
Yeah,
the interest rate's going to go up.
exactly.
Okay.
And if there's a ton of people lending Bitcoin,
Rates might drop.
rates might drop.
Okay, it's all about finding that sweet spot
Yeah,
where the demand for borrowing matches the supply from lenders.
you got it.
Okay, but how do I actually earn interest?
Okay, so let's say you want to lend out your crypto on aave.
Okay.
Here's what happens.
Okay.
You deposit your crypto into aave's lending pool,
Okay.
and in return, you receive special tokens
Special tokens.
called tokens.
Tokens.
Yeah.
Okay.
So if you deposit Bitcoin, for example,
Mm-hmm.
you're going to get tokens that represent your share
Okay.
of the Bitcoin lending pool.
Got it.
And those tokens accrue interest over time.
So they're like a receipt
Exactly.
showing how much Bitcoin I've lent out,
Yeah,
and they just grow as they earn more interest.
that's it.
Okay. And that interest is tied to,
It's directly tied to the borrowing activity.
oh, wow. So if there's lots of people borrowing Bitcoin,
Yeah.
my tokens are earning a higher interest rate.
Exactly.
That's cool.
It is pretty cool.
So what happens when I want my Bitcoin back?
You can redeem your tokens for your original Bitcoin
Anytime.
anytime you want,
Okay. Plus all the interest.
plus all the interest.
Sweet. Okay. So I think I'm getting this. But you did mention earlier
Yeah,
that there are some risks involved
right.
with DeFi lending.
There were
We talked about price volatility.
Mhm.
What else should I be aware of?
Okay, so another one is smart contract security.
Smart contract security.
Yeah.
I've heard of smart contracts.
These platforms are built on code, right?
Right.
And if there's any vulnerabilities in that code,
Oh.
hackers could exploit them.
So someone could like drain the entire lending pool,
It's possible.
steal my crypto?
Yeah, it's a scary thought.
That sounds terrifying.
It is a risk.
Okay.
But reputable platforms like aave, they invest heavily in security.
Okay.
They've got audits and systems in place to prevent these things.
So it's kind of like I'm trusting them
To some extent, yeah.
to keep my crypto safe.
You are. But that's why it's so important to choose platforms that have a good track record
Okay.
and that are transparent about their security practices.
Gotcha. So choose wisely. But
Exactly.
do your research.
Do your research.
Okay. So price volatility, smart contract security, anything else?
One more thing.
Okay.
Liquidation.
Liquidation.
Remember we talked about over-collateralization?
Yeah. You got to put up more than you borrow.
Right. If the value of your collateral drops too far,
Oh.
your loan could be liquidated.
Liquidated?
Yeah.
What does that even mean?
So basically, the platform automatically sells off some or even all of your collateral
Wow.
to bring your loan back within that required ratio.
So like my spaceship gets repossessed.
Pretty much.
Ouch.
Yeah, it can be painful.
Okay. So liquidation basically means I lose my crypto.
Potentially, yeah.
Okay. Well, this is a lot to think about.
It is.
It's like a high stakes game of chess.
It is kind of like that.
You got to make the right moves
You do.
to win.
Exactly.
All right. So we got DeFi lending,
Mm-hmm.
potential rewards, some serious risks.
Definitely.
But it seems like a pretty powerful tool
It is.
for unlocking the value in my crypto.
Absolutely.
Okay, well, before we wrap up, I want to circle back to something you mentioned earlier.
Okay.
Tokenized real estate.
Yes.
How does that fit into all of this?
So this is where things get really futuristic.
Okay.
Imagine owning a piece of a skyscraper.
Yeah.
Or a shopping mall.
Okay.
Or even a tropical island.
That sounds amazing.
All represented by digital tokens on a blockchain.
It's like something out of a movie.
It kind of is.
Okay, but how would that actually work?
All right, let's say you own a beach house.
Okay, I like where this is going.
And that beach house has been tokenized.
Tokenized?
Yeah. Your ownership is represented by digital tokens on a blockchain.
Okay.
Now let's say you need some money to renovate that beach house
Okay.
instead of getting a traditional home equity loan.
Yeah, with all that paperwork
Exactly.
and hassle
You could use your tokenized beach house ownership
as collateral.
as collateral on a DeFi lending platform.
So it's like using my crypto as collateral,
It's the same concept.
but instead of XRP, it's my beach house tokens.
Exactly. You deposit those tokens on an aave
Okay.
and borrow stablecoins against the value of your property.
So I still own the beach house,
You still own the beach house.
but I have the money to fix it up.
That's the idea.
My mind is officially blown.
It's pretty amazing stuff.
So how far off is this?
It's closer than you might think.
Really?
There are platforms and projects already working on this.
Wow. So we could be looking at a future
Yeah.
where real estate transactions are like instant, more transparent, accessible to more people.
Absolutely.
That's exciting.
It is exciting.
Okay, but before we get too carried away
Yeah.
talking about the future of real estate,
Right.
we need to address the elephant in the room,
Oh, yeah.
taxes,
Taxes.
Let's
The one constant in life.
even in the crypto world.
Even in the crypto world.
Okay, so tell me how DeFi lending
All right.
can make tax season a little less painful.
I will.
Okay, so we're back and we're talking taxes.
Tax.
Everybody's favorite topic.
Right.
So let's talk about this hypothetical scenario
Okay.
where I'm using my XRP
Yeah.
to borrow stablecoins on aave.
Mm-hmm.
I've got my loan, I'm upgrading my spaceship or maybe my beach house.
Right.
But when do the taxes actually come into play?
So here in the U.S., looking ahead to 2025, things are looking a bit brighter.
Brighter. How so?
On the tax front,
Okay.
you know, the current situation, it can be a bit murky.
Yeah, a lot of gray areas.
Yeah. But by 2025, we're expecting a more straightforward approach.
Okay, so let's say I take out this loan using my XRP as collateral.
Mm-hmm.
I haven't sold anything yet.
Right.
So no capital gains tax.
Exactly.
Right.
As long as you're simply borrowing against your crypto,
Yeah.
you're not triggering a taxable event.
It's like taking out a loan against my car.
Exactly.
I still own the car.
You still own the car.
Okay, but what about when I convert those stable coins
Right.
to USD
Mm-hmm.
to like pay for those spaceship upgrades?
Yeah, that's a good question.
Isn't that when the IRS gets involved?
So that's where things get a little tricky.
Okay.
Currently, there's some debate about how that conversion is treated.
For tax purposes.
Yeah.
Okay.
But the good news is, by 2025,
Yeah.
we're anticipating some regulations that will clarify things.
So it'll be more like a traditional loan?
That's the hope.
Okay.
So by 2025, converting those stablecoins to USD for loan proceeds,
Yeah.
it should be viewed as a non-taxable event.
Oh, okay. Like receiving funds from a home equity loan.
Exactly.
That's a relief.
It is good news.
So the real tax hit comes
When you sell your XRP,
when I finally sell it,
that's when you'll calculate your capital gains.
based on the difference between what I bought it for and what I sell it for.
Exactly.
So if I bought my XRP at 50 cents
Mm-hmm.
and sold it at $50,
Yeah,
that's a big capital gain.
it is.
Okay. But I did have the opportunity to use those funds
Right.
without paying taxes when I initially borrowed against it.
Yes, exactly.
So it's kind of like a strategic move.
It is a way to play the long game.
Play the long game and defer those capital gains taxes.
Exactly.
But I probably still need a good tax advisor
Oh, absolutely.
to make sure I'm doing everything right,
It's always a good idea to consult with a professional.
especially when it comes to crypto.
Yeah, they can help you navigate all the complexities.
Awesome. All right, so it seems like DeFi lending
Yeah,
is a really powerful way to access capital.
it is.
Without that immediate tax hit,
Right.
you keep your assets,
Mm-hmm.
you can benefit from future price appreciation,
Absolutely.
and you can defer those capital gain taxes
All good things.
as long as you're aware of the risks.
Right.
Right.
It's important to understand the system.
And play it smart.
Play it smart.
Well, I feel like we've learned a ton in this deep dive.
We have covered a lot of ground.
From the basics of DeFi lending
Yeah.
to the mind-blowing potential of tokenized real estate.
It's a fascinating space.
It really is.
It's changing so quickly.
I know it's hard to keep up.
It is.
But that's why we do this show.
Exactly, to help people understand.
And stay informed.
And hopefully make some smart decisions.
All right, well, I want to thank you.
I thank you.
For guiding us through all of this.
It's been my pleasure.
It's complicated stuff.
It can be.
But you made it really easy to understand.
Oh, I try.
And to our listeners out there,
yeah,
stay curious.
Stay curious.
Keep learning.
Keep learning.
And don't be afraid to explore.
Explore the possibilities of DeFi.
That's right. DeFi can be your key.
It can be.
To financial freedom.
Absolutely.
All right, that's it for this deep dive.
Until next time.
Until next time, stay informed.
Stay engaged.
And keep pushing the boundaries.
Of what's possible.
In the world of finance.
In the world of finance.
We'll see you next time.
See you later. See you later.